Welcome back to Stocklabs for another market recap. We've hit the midpoint of August on August 12th, closed up the week on Friday, and it was a pretty decent week for the market. We were kind of expecting just some more continuation of the current recent trend up, and that's basically what we got. The indices themselves, top performer was the Russell, up 5%. Then S&P up 3.2%, Dow up 3%, and the Qs actually lagged 2.7% on the upside, which is a little bit different because tech has been leading on this most recent upswing. So to see that sort of take a back seat is something to note from this week. Bonds again, kind of just still chopping around, not doing much, and crude had a big recovery this week. So we were saying you should look for basic materials. They kind of needed to rescue themselves this week, and they sort of did. As far as our mega cap leadership stocks, I think these mostly hung in pretty well. So they were up 4% as a group, which is better than the NASDAQ. Netflix outperformer up 10%, Facebook, Meta up 8%, Tesla 4%. I mean, the top two were far and away removed from the rest, and then Nvidia lagged, actually had a down week, down 1.5%. So not bad from this group, mostly in line with the market, with the exception of the two that sort of these two were sort of the most oversold, I think, coming over the last several months, and they rallied the most. So there are probably some more shorts in these ones than some of these other names, and they squeezed a little more with the market as the trend has become has sort of extended higher. As far as breadth from industry perspective, it was pretty broad. Like I said, basic materials had a really nice week, up 6.5% for the median materials stock. Tech lagged, median tech stock up 2%, which is worse than the Qs overall. So tech is maybe stalling out a bit here. You see some services, industrials, consumer, they were all pretty good. Healthcare, this has also been one that's been leading, since sort of the second half of the year started, but is sort of, but it was the underperforming. It's not an up week, but it was the underperformer as far as what was moving the most. Subsector wise, like I said, pretty broad overall for the market. There's a lot of different stuff in here. We've got 25, 50, 55 sectors that are up 5%. So pretty good breadth. One of the better weeks of the year, breadth wise. And on the downside, there wasn't much. So nothing really to draw from this. It was the rally was broad, had really strong sectors, and maybe that's a sign of some little bit of euphoric sentiment in the market, at least near term. As far as breadth from a market cap perspective, 1 to 5 billion, okay, up 5%. So you see, like, the most speculative stuff is moving the most, 4.3% for 5 to 10 billion. 10 to 50 billion, 4%, still pretty good. 50 to 100 billion, up 3%, kind of in line with the market. And 100 billion plus, same thing, 3%, basically in line with the market. So, the significant outperformance from the really smaller cap stuff is sort of, I'm not going to say worrisome, but it is sort of an indication that, people are definitely willing to take more risk now that the market has sort of rallied, way off the lows. People start piling back into all sorts of nonsense. So take that for what it is. As far as as far as intelligence goes for this week, again, we've got another week where there's not much on the bullish side here. I mean, I don't know what this is, some carbon ETF, and this looks like some kind of, I don't know, some kind of bear ETF, because it's kind of like the ticker is hedge, but I'm not even going to look at what it is. So on the downside, we've got HIBS, SRTY, VIX, and gold miners. So, okay, this would sort of, short Russell and short high beta would kind of continue the dash for trash type rally, where the small cap stuff is running, and maybe the larger cap stuff is spending some time consolidating the up move. And VIX down, would sort of mean that the indices mostly churned in that scenario, like churned slash drifted higher. But yeah, I mean, I would say this is the most overbought the market has been basically this year. You see this 3.01 score on hybrid. I don't think we've hit this score. Oh, we had a 3.02 back here. Okay, we had a 3.02 in February 1st. So we're right there, 3.01. I mean, the backtest data is kind of mixed on this. Let's see, overbought, oversold. Let's see, 6 month overbought. See, like next 5 days, kind of churnish action. If we backtest 6 months, same thing, up and down. 5-year backtest is not really relevant to the tape we're in. So, and 3-month backtest, same thing, but only one data point. Actually, I think the same. Yeah, there's only one data point for all of this. So, 1-year backtest, yeah, just some churn type action here. If we look at real time intelligence, same thing, flattish tape. 6-month backtest. Again, we don't have any. Market hasn't been this overbought in at least the last 6 months. So it was like going back to February 1st is just outside 6 months. So I think what you should probably be looking for is a little bit of a breather in the market. I mean, no one's saying to run out and short the whole thing, but it's probably better to start thinking about hedging some positions, or maybe reducing some risk in areas that that you've caught nice upswings in over the past few weeks. Just to be on the safe side. I mean, summer's winding down. The real traders are going to be back at the desk in a couple weeks. So yeah, that'd be my approach. Just dial back some risk this week and get ready to reassess everything, a little bit down the line. Once we get some consolidation or some pullback type action, then, we can see what the market's really made of. Okay. So good week for the market. Like we said, we were expecting sort of this continuation higher, and that's basically what played out. Now sort of looking for some consolidation, pullback type action, more two-way trading. Should be on deck this week. I didn't look if there were any specific earnings or releases or anything coming out this week, but I don't think it really matters. Okay, so thanks for tuning in. We'll check back with you next week, and good luck out there.